15 years ago, when China slowed by about 1 percentage point around SARS, the whole world didn't even notice that. It was just, business as usual. Whereas now, China accounts for nearly a fifth of the global growth. China slowing by 0.5% would be seismic, let alone 1%. Absolutely. And mind you, it's services, yes, but even on the manufacturing side, I think this again reveals a vulnerability of the world towards having a huge amount of reliance on the Chinese supply chain. Whether you look at a country like Japan or a country like Vietnam, very different ends of the sophistication spectrum, if you will, but they all have 50–60% of their intermediate goods coming from China. So not only will China slow and have impact for the global demand, these countries which rely on Chinese intermediate inputs will also be affected.
Let's talk about manufacturing, because we got the official PMI number out today, which showed a reading dead on 50. So I guess you can call that in expansionary territory. Was that going with the whole narrative that we saw at the back end of 2019, where it looked as though we were seeing green shoots in Chinese manufacturing, things were turning around and people were becoming a little bit more optimistic on the outlook for the Chinese economy?
Yeah, I didn't like the reading. First of all, the reading does not include the epidemic or pandemic risks, and even then, manufacturing was rather soft. The narrative that we have been pushing for the last 3 months, looking at global PMIs, is that we have a trough in the electronic cycle. This will lead to a big pickup in shipments by the time first quarter comes around. China's manufacturers are not playing ball with that narrative. We've seen elsewhere, whether we look at earnings numbers from S&P 500 companies or some of the GDP surprises we've seen from Taiwan, pretty decent corroboration of the narrative. But these Chinese PMI coming from today, where again, services sort of holding up, manufacturing is not catching momentum, not a good set of numbers, and of course it will exacerbate in February.
Right. Could it though be seasonal? Of course, we know that much of the world over January is really shut down. We know that we're going into an earlier Lunar New Year this year than had been in previous years. Sometimes we know it's in the middle of February. Of course, it was in January this year. Could that have been a factor involved in the number?
As the perennial optimist that I am, I'd like to hope so.
Yeah.
But at the same time, it should have shown some pop from the phase one trade deal, and it still didn't. It should have shown some pop from the fact that other manufacturers are showing that shipment is picking up. So I think this sort of reflects some degree of malaise in domestic demand, and hence Chinese manufacturers who may be getting optimistic about export orders are still not that optimistic about the overall outlook. That's a bit disappointing and cause for concern.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.